Hey, and welcome back to a new video. Today I want to talk about candlesticks, candle patterns, and how to analyze candles and understand candles a little bit better in market context. So first of all, let's start with a very common behavior, and you will see this pattern mostly on commodities, futures, and on stocks, not so much on individual Forex, especially not intraday Forex, because this pattern depends on gapping behavior, and in Forex you don't have it due to the 24-hour open markets, but on other markets this is very common, and we call this the abandoned baby. So let me highlight one example and then it becomes obvious why we call it that way. So here is a very nice pattern for this. So you can see we're coming from this uptrend, and then suddenly price gaps higher. Then we leave this small candle, and then after this small candle price gaps a little bit lower, and it leaves this this candle is then in the context abandoned, and so that's where this pattern got its name from. It's one lonely candle, it's smaller, and the small size refers to the term baby, and the abandoned means that we gapped away on both sides. Let me just point out one more and or a few more. So for example, here is another one to the downside. Although we don't have the gap here, which is the gap is not that important if we have all the other criteria. So you can see we had those 5 strong red candles. Then the 6th one was a very small candle to the downside, and after the small candle we had a big reaction to the upside. This was then the baby. It was not abandoned that much, but it was a very small candle, and it's very different in the market context. Then another one would be obviously here on the right side. We had this large green candle, then this very small tiny doji where price did not move at all. And then on the next candle here, the red one, we gapped lower to on the open, and then price tanked and moved lower. And so the abandoned baby always or almost always means a trend reversal, because here it is very obvious we are coming from this uptrend. Then this is something like an exhaustion gap where price makes a final attempt to move higher. The price action here was very small, like on all the abandoned baby candles. And obviously after a trend continuation would look much more strong. We would get a much larger green candle. So this is the first clue that we are not having the trend support anymore. And after the candle we even gap lower into the opposite direction, which is then a very clear confirmation that price is changing the momentum. Here as well we had large red candles, and then we would expect, if the trend was going on, we would expect another red candle. So the small size is already the warning, and then the next candle is the complete trend reversal. And after the green candle, even if you don't call the top and the absolute bottom on the abandoned baby, because keep in mind the small candle is not the signal itself, so you don't enter just after this candle closes, and you don't enter after this closes or this one, but you wait one more candle, and so this becomes a three candle pattern. And after you see the confirmed change in trend direction, then you get the signal to enter. So here you would not have entered until this candle would have closed. Here as well you probably would have entered a little bit lower after this top has formed. Here as well you can see we shot up. Then the people who expected more bullishness were very surprised once we saw the candle. This candle was obvious, the signal that there was not a lot of bullish support, and then even here on the next candle we moved lower sharply, and this then also foreshadowed this trend reversal. The next pattern is probably one of my favorite patterns. It is the outside bar or the engulfing candle. This bar and this pattern both can be a trend continuation or a reversal pattern depending on the context. So just let me mark a few, and then I can explain you better what it actually is. So as the name suggests, the outside bar is a bar where the new candle, like the green one here, completely engulfs the previous candle. So you can see the green candle here, the low and the high are completely engulfing and outside of this previous red candle, and we can find a lot more of those when we take a look. So here as well, the green candle in the direction of the trend, we had this red candle here, but then price moved higher and completely the red candle falls into this green one. No matter where we look, they always stand out very nicely. Here as well, the red candle in this case is the engulfing bar where you had the green candle, and then the next one, the red one, was completely outside of this bar. And it's a very common pattern. Here another one. It's not that ideal, this red bar, because you can see we have a lot of wicks, and ideally you want to see a stronger close and open. So ideally you don't have a lot of wicks on the outside or engulfing bars, but nevertheless the meaning and the signal is the same. Then let me just draw a few more, then we can go into the analysis afterwards, and it becomes very obvious what this pattern tells you and why this is such a good and interesting pattern to have on your charts. So I've now marked a few more. So the engulfing bar shows you that the candle that engulfs is much stronger than the previous one. So here, for example, we're coming from this uptrend, then we have this small candle which already shows us that something is changing, and then in the next bar we move higher, we got rejected, we close way lower even though we don't make it to the absolute close. This already shows us that there's not much buyer support. Then here we have a new engulfing candle. After price makes this green bar, we can see that price is not following through and not making higher highs, and even this engulfing bar closes very low, close to the low of the candle. We don't have a long wick, and then we start the sell-off. Then as we move lower, you can see here is another engulfing bar. This bar moves outside of the green bar. The green bar is very small as well, and then the absolute low of the bar is also below this. You can see we had a previous low here, so we got some type of reaction, but you can see the bulls were not as strong to completely reverse the trend here. And then this engulfing bar with the break and on the following candle signaled that the bulls were in control, and then we saw trend acceleration and more selling coming in after this pattern. And then here is similar to what we saw on the Abandoned Baby, but this is Forex, the 4-hour chart, so you don't have a lot of gapping behavior, but it's very similar to what we saw on the Abandoned Baby. So you're coming from this downtrend, very strong and large candles, then you have those two small candles, and after the small candle you have a strong bullish candle, and this is a very classic reversal signal. And then here on the way up you can see price we try to move lower a bit. This is an inside bar actually, where this candle completely falls into the previous one, and after this one even we had an outside bar where this green candle completely engulfs this red candle. So this could be seen as a trend continuation for the bullish trend. Then here again we had the follow through. This is even a pin bar where price tried to move lower, and then it got rejected as more buyers came in and pushed price higher. So this was actually another signal that not enough sellers were in the market. Then here again a new bullish engulfing candle. Price did completely fall, engulfed this red bar, and then the sell-off and then the rally followed. And then as we moved into this top here, again we can always combine a candle analysis with conventional support and resistance. You can see we had this previous high here, and then once price moved into the highs here, we can see we had large candles, then the candles got smaller, similar to what we saw down here. And then this red bar here, it was not completely engulfing, but it was showing engulfing tendencies. Then here we moved into the bottom here, but we did not break lower, and then on the way up back into this support, we then got this rejection. Again we had large green bars, then we had a smaller trading activity similar to what we saw here, and then this bar is very large and engulfs a lot of previous price action. Even we had this rejection wick here, which we see later on the pin bar as well. So this was a strong signal that the momentum was reversing, and you can see here price then completely sold off into the previous lows again. And here, once we were back into the lows, we had this double bottom, and on this double bottom then we see this large green bar. It's an engulfing bar again, and it completely falls into, and the previous candles completely fall into this bar. Then after this green bar, we even saw that price was trying to move lower again, but even though price almost made it to the lows, the buyers stepped in and pushed price higher, and this is a pin bar as well. And after this one we moved higher. We saw even a gap here, which is a strong bullish signal on Forex, and then we moved higher and higher until we reached the top here. Again, we came from very large candles to very small ones. This is a fake breakout with a pin bar, as we will see shortly, and then price sold off again. And now let's conclude with the pin bars, which are a very common used technical analysis tool. And a pin bar is a candle with a very long and a wick that stands out often, and the head and the close of the candle is usually very small, and it's on the complete opposite side of the pin bar. At the same time, usually pin bars don't have a long wick into the opposite direction, which means that they close near the absolute top or the bottom, depending on where the wick is. So this would be a pin bar where price tried to move lower, but then the buyers came in, like we said on our previous example, and then price was pushed higher. And then you can see afterwards the very large green bars. So this was even a different pattern as well with the pin bar. So we had this consolidation at the double bottom. Then this is a fake breakout, which is often a very good trading pattern to know about, and especially if it's confirmed with such a pin bar, then it can signal good reversal trades in the opposite direction. And then we moved higher. We can even see a few engulfing bars here along the way that acted as continuation, and then here even this engulfing bar, the red one, that showed the complete the trend reversal here after this rally. And again, it's not a surprise that this engulfing bar falls into a previous support and resistance zone. We can even extend that further, and then we can see where this level came from. And there are more pin bars. So you can see, if we take this off again, that this would also count as a pin bar, although it's also something like an engulfing bar. So you can see this wick to the upside, and then price reversed very strongly. It closes here near the bottom. So this could have counted as a mix of an engulfing bar and a pin bar, because although you have the wick here to the upside, you also have the very strong close, which completely engulfs those two candles. And again, if you have been following my channel, you know that this is a supply zone where you had some consolidation and then price started the sell-off. So this is always a good confirmation tool and a good confluence, because these candles, they are much more strong and meaningful signals if they also fall into an area with a previous technical analysis concepts, or where you had other reactions. And pin bars are everywhere, and here is another one that we can look at. Here, this one as well. We were in this very slow downtrend. It was more of a range, and then suddenly price started to move higher. It left this wick, as then the sellers came in and tried to push price lower. We closed at the very low of the candle, which is a very bearish signal with the rejection and the strong or the weak close in that case, and then price sold off into this into the lows. And that's basically how I use the information of candles, and how you use size of candles, the wicks, the relative context to what has happened previously. Because keep in mind, a candle is a very weak signal by itself, but you always have to put it in context to what has happened previously. You don't analyze just one candle, but you always look back a few candles to see if it's actually meaningful in size and if it makes sense in the context. Then, as we said, you always look for other confluence in other technical concepts, and ideally you have support and resistance, you have double bottoms, double tops, supply and demand, and when you see a candle signal at such a key price level, then it can give you much more confidence, and it can improve the accuracy of your trading signals and your trading information.